So in this video, we're going to be diving into supply and demand. This is the only supply and demand video you need to watch. No waffle. We're going to keep it extremely concise so you know exactly what's going to make you money. Okay, in simple terms, what is supply and demand? This is when you have a product or you have something. A lot of people either want it or a lot of people are selling it, right? It's one or the other. Usually when a lot of people are selling it, then price goes either up or down. But when there's sellers, generally price will go down because there's a lot of people trying to get rid of the product, so they will undercut each other. That's just how it works in business. What is demand? You only have one phone. This is the only iPhone 16 Pro that exists in the whole world. I'm the only one that has it. So if I'm trying to sell this, I'm selling it for £1 million basically. So a lot of people are gonna want it because it's the only one that exists in the whole world. Do you get it? So price is gonna go up. So we can apply this onto the chart as well. And looking at the chart right now, how do we see supply and demand on the chart? Very, very simple. You want to pull back and then you want price to dump. When there's a pullback and price dumps, there's aggressive selling. Or if you have a pullback and price shoots up, there's aggressive buying. When we see that, that's an indication that, okay, there's a lot of buying going on or there's a lot of sales going on. So in this example, we're looking at a supply. A supply, we can see we have a blue candle, which goes up, and then multiple black candles dumping, and price just keeps shooting down. So based on this factor now, it's very, very simple. All we want is for price to return back to that zone, get there, and we want to see some kind of reaction. We want to see if price is going to now do what it's done before. Ultimately, what trading is using probability to try to follow a trend or what's happened before, right? Price went somewhere before. If price goes back there's a chance it's going to do it again. That's all trading is. So based on this, we want price to go back up there before because we saw that price dumped previously. So you can see in this case, price goes back up there, taps into this area where we believe, okay, price dumped in this area, so it's going to happen again. So price is respecting it, right? We can see that price starts to shoot down. So all we want to do is just enter the trade, right? Based on that, we just want to enter. You can put your stop loss wherever you want. Generally, this is where the rejection happens. So let's put it right above it. And if you want to play safer, you can put it right at the top. Either way works. Generally, the safer bet just means that you're really respecting the zone. So at some point, price can go back up there to test this area again where price previously sold. It can happen, and then we'll continue, right? So it's not just like it taps at once and just dumps every time. So in this example, let's just say we're going for 101 in this case. Boom, 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 boom. Price plays around, and eventually you do hit it, right? You're pretty much saying, okay, this is the point that price wants to get to and carry on. Both system works on where you put your stop loss, doesn't really matter. It's up to you. So now with supply and demand, you have a high probability setups and you have low probability setups. To differentiate between these two, low probability setups is when you are usually lacking some kind of break of structure, which is basically an indication to show you that market wants to go in that direction. If structure hasn't been broken, it's probably a low probability setup. So number one. Two is when there is no fair value gap because this helps you to kind of buff up the supply and demand zone. In other words, for price to shoot aggressively, usually a fair value gap is formed. So if it's missing one, it's generally not a high probability setup. So this trade I'm currently in at the moment is still sort of consolidating, but we're still in profit. And this trade is being copied onto my Blue Guardian prop firm challenge at the moment, and the challenge is going pretty smooth. Currently up 3k. So this is the best time to tell you about Blue Guardian. They are currently sponsoring this video, and they are a prop firm that, as you can see, I'm currently using, trying to pass a challenge with. So far, it's been an amazing experience. The customer service was pretty good, leverage is pretty good. I've had no issues so far entering the trades that I go into because I'm a scalper, and usually some prop firms, their leverage is so low that you're not able to take these trades. But so far, I've literally had no issues whatsoever. One of the best things about them is that their commission is industry standard, so you know that they're not eating too much into your profit, because that does make these prop firm challenges a lot harder. Most prop firms these days also do not allow copy trading, but as you can see, I'm able to copy trade from my personal onto these prop firms. So that way you can trade multiple accounts this way. You can focus on one account and literally copy your trades onto as many accounts with them as you want. And one of my favorite things about them for sure is that they still stick with balance-based drawdown. This is one that is necessary for any trader. If you want to be profitable, you don't use any other form of drawdown because this will mean that your stop loss keeps trailing and it just causes issues with the maths. But in terms of the traditional rules, they are keeping it simple. As long as you're a good trader, you follow the rules, everything's extremely simple. You're able to trade the exact trade that you want. Once you do start to make 1, 2, 3%, any percentage that you can make, then they're going to reward you with the payout, and you're all good to go. So prop firms is the future. Make sure that you do check them out. There is a link directly in the description of this video. Use code SULLY for the best discount. And thanks to Blue Guardian for sponsoring this video. Looking at this example right here, you can see that there is a fair value gap from here. However, our supply starts from here. So it's not directly, attached to the supply. The supply itself didn't really cause the fair value gap to be formed. However, it's still there. Secondly, we have this low right here that needs to be broken, and price has not broken this low. Price failed to break the low. So in this case, if you're taking this setup, what you will see is that you can put your stop loss right here, and you're looking for a 1-to-1. Not sure if we get it or not, but you can see price just about gave you that 1-to-1. Oof. So you can see even low probability supplies still work. There will be times you're going to cook, there will be times you will win, but it was a close call, right? This is still a low probability supply, but you can kind of rank them. Now this is still a low probability demand. However, you can kind of rank them. This is still a better setup than the previous one. If we're looking at this setup right here, you can see that we have our demand zone. However, it's not directly attached to this black candle, which is the initial drop before the pump, right? Before price shot up incredibly. However, based on the volume, we broke this high right here. We broke this high right here. It's still very good. Price came back, respected it to the T, respected the fair value gap to the T. If you haven't watched the video on fair value gaps, that's going to be episode 2 of this mini course on supply and demand. Now you can see price respected that to the T twice, right? The black candle didn't close in, the blue candle didn't close in. So if you're just looking for a 1-to-1 and you're playing an extremely safe point, your stop loss right outside the zone, what happens? Boom, 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 price plays around, and eventually you do hit that 1-to-1 again. So it's pretty much a simple concept like this, and you're just cooking time and time again. This is a high probability setup. Why is there a high probability setup? Number one, we have this demand zone formed, aggressive push to the upside, and a fair value gap is formed between these two candles right here. Boom. And you can see eventually price comes back, fills the fair value gap to the T, and continues its way. It didn't close in within the gap, so that's brilliant. That's what you want to see. Once that is filled now, this is a high probability setup. This is everything is ticking the box. You have market structure, price is pushing up the entire time. You have a fair value gap present, and you have a demand zone with multiple blue candles, right? We had this blue candle. Yes, we had a black one of price kind of breathing a little bit, but then multiple blue candles again. In this case, you're taking this any day, any time. I'm putting my entry right here. Price didn't close in, so that's a good indication that the buyers are present. And now in this case, you can go for a 1-to-1 or even a 1-to-2. But we've been going for 1-to-1 so far, so let's see, can we scalp another one up? Price eventually gives you that nice boom, 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 and continues about its way. Multiple blue candles could not even go a 1-to-2 from this. This is a high probability demand. This is the setups that you want to be taking most of the time if you want to increase your chance. When you combine everything, this is what you want to be taking. You have good price action in the right direction, perfect demand, perfect fair value gap. If you are not taking this every single time, then in other words, you're risking taking worse trades. This isn't going to win every single time, just to be clear. Sometimes a low probability will win and a high probability sell might not win. But overall, with good risk management, I can almost guarantee, I'm not guaranteeing anything, but almost guarantee with good risk management, good psychology, you will make money over the long run. It's really that simple. It's really that straightforward. This is a very, very concise crash course of supply and demand. So if this has been useful, be sure to subscribe, and I'll see you guys in the next one.